In the stock market, you track important companies across sectors to get a sense of how the market is moving. These companies form the stock market index, which reflects the overall market sentiment. Let's talk about the index. A stock market index provides an overall view of the market by tracking selected companies. Sensex represents the Bombay Stock Exchange, and Nifty 50 represents the National Stock Exchange. Both indices reflect market sentiment. A rising index signals optimism, while a falling index shows pessimism. Practical uses of the index. Information: indices reflect the overall market sentiment. For instance, a rising Nifty 50 shows optimism about the economic future, while a drop signals short-term pessimism. Benchmarking: the index serves as a yardstick for performance. If your portfolio returned 20%, but Nifty gained 30% over the same period, your performance could be considered underwhelming. Investors often aim to outperform the index. Trading: many traders take short-term positions on the index itself, predicting whether it will rise or fall. For instance, if you expect a positive budget announcement, you may buy the index before the speech, hoping to profit from its rise. Portfolio hedging: investors with long-term stock portfolios can hedge against adverse market conditions by using the index to minimize potential losses. Index construction methodology. The stock market index is composed of various companies from different sectors. Each stock in the index has a specific weightage based on its free float market capitalization. Larger companies like Reliance Industries have more influence on the index's movement. For example, Reliance contributes 11.03% to the Nifty's movement, making it the most influential stock in the index. The weights are calculated using the company's free float market cap, which is the product of its stock price and the total number of shares available for trading in the market. Here are the top 3 companies by weightage in the Nifty 50. HDFC Bank, 11.02%. Reliance Industries, 9.13%. ICICI Bank, 7.73%. Sector-specific indices. In addition to broader indices like Sensex and Nifty 50, there are sectoral indices. These track specific industries like banking, Bank Nifty, and IT, CNXIT. Such indices allow market participants to focus on specific sectors for more detailed analysis. Key takeaways. An index is a barometer for the economy's health. A rising index indicates optimism, while a falling index signals pessimism. India's 2 major indices are Sensex and Nifty 50, which use free float market capitalization to determine stock weightage. Indices are useful for information, benchmarking, trading, and portfolio hedging. Sector-specific indices like Bank Nifty reflect sentiment within individual sectors.